mortgage refinancing hits highs. Mortgage rates dropped to their lowest level since October of 2024, sparking a 58% surge in refinance applications last week. Adjustable rate mortgages, or ARMs, rose to 12.9, almost 13% of total activity, the highest share since 2008. While the average refinance loan size hit a 35-year high. Despite economic uncertainty, homeowners are seizing the opportunity to lock in savings. Why don't you tell me, Jake, what do you think matters here? Why does this
Well,
matter?
this is a big deal. It's a big deal for homeowners looking to lock in savings. So for high net worth investors, it's a signal that liquidity is being unlocked. And for retirees, it might be time to revisit mortgage terms or consider downsizing if you've been waiting for mortgage rates to go lower. Now, the deal here is, Cory, mortgage rates haven't plummeted. But my mortgage guy just reached out to me and he said I can get an ARM as long as my loan to value is 75%. I think he could get me an ARM in like the fives. So that's not a bad deal, right? Compared to like when I bought my house, it was in the sevens. And so you're right. It has moved quite a bit. But I want to be clear here. Just because the Fed lowers rates doesn't mean the mortgage rates are more predicated on the 10-year yield, not the short-term rate. So the Fed controls the short-term rate, the overnight window of what banks can borrow at. They don't control at all, Cory, the 10-year yield. And so my point is, even though the Fed lowered, mortgage rates could go back up, and that very well could happen. And so you just want to be on top of it. Now, again, this is no rule, but I personally like to save over 0.5% or ideally 1% if I'm going to refinance, because there are fees associated with refinancing. So if you are looking at refinancing, make sure that you do an adequate break-even analysis, meaning you need to figure out, yeah, it's great you're getting a lower rate, but how much dollars in fees are getting rolled back into your mortgage, and how long is it going to take you to pay back those fees? So my point is, you might refinance, but the break-even might say, well, you have to live in the house 3 years for this to make financial sense, for you to actually recoup the fees that you just paid. So just be aware of that. Don't just go refinance every time you can, because there are fees associated with it. So the key here, Cory, is just to review your mortgage. If you haven't done it in the last 6 months, now's a good time to do it.